experience the context of the social environment, the traffic, and so on and so forth. And then once you find your ideal home, then you begin to Hi guys, welcome back again. I'm Brenna Yong, licensed financial advisor by UBK Advisor, as well as a global master trainer for our education series that I've written called the Wealth of Life series. Now, this particular episode, we're talking about part 2 of breaking down financial advice from social media.
Okay, number 3. If you can't write it off, this is just a great principle. If you can't write it off, don't buy it. So these are screens, they're little filters, right? It doesn't mean that I will never violate these. It means I got to have some position to start trying to live off of this. If I can't write it off, I'm not going to buy it, right? So like, what do I, also, if I could write it off, I'm more inclined to buy it.
Okay, the video says that if you can't write it off, don't buy. Yeah. So from the context of a licensed financial advisor, I break it down into mechanically as well as deeper thinking process. So I would suggest you to understand it from two perspectives. One is an appreciating asset, the other one is depreciating asset. So both can write it off. Let me take you through depreciating asset. For example, buying a car is also an asset, but is depreciating. From the accountancy perspective, and the car is being deducted 20% depreciation value every year, which means you buy a car worth 100,000, in 5 years time it worth 0. So are you writing it off? It is being written off. You like it, you don't like it, in 5 years time, in accounting level, it is a depreciating asset that is costing you 0. So therefore, I have clients with their billionaires, millionaires, trillionaires, whatsoever, they believe in BMW. Now what does that mean? BMW, the biking part, the MRT part of it, as well as the W means they walk. The biking, the MRT, and walking. See? Now that is the depreciating asset. Let me take you to the appreciating asset. Now, do you write off an appreciating asset? The answer is yes. Let me tell you a story. When Dell was listed, the owner of Dell actually sold it off. Was he writing off his particular company? The answer is yes. And what happened? Over 20 years, the owner of Dell and his net worth has grew 3,000%. So you ask me, you can't write it off, don't buy. I would say yes for this particular statement, and it's sectorized into appreciating asset and depreciating asset.
Number 4, rent and lease, don't own. You don't need to own any of this stuff. Just use it.
Now, this particular statement say rent and lease do not own. So basically, as a licensed financial advisor, I would like to put the context in proper order, in the context of a single person, and in the context of a married couple, and the context of old age. Because the context of advice is very important. Rent and lease and don't own. This statement, is it correct or not correct? What is the right answer to this particular statement? I would contextualize it from the context of the personality of the person and season. If I can do a matrix, it's about single, it's about married couple, an old person, short-term, mid-term, and long-term. This is a matrix. I'm going to advise and share in the context of this metric. Now, let's say, for example, a young person. If you buy a property at a very young age and you find that, oh, this is such a beautiful place, and then the moment you shifted in, you find that, oh, my community is wrong, and I don't like the pool, I don't like the traffic jam, and at the end of the day, it's going to be a painful experience. The installment payable for you per month is going to eat up your disposable income. So therefore, at a younger age, it's good to rent and lease, don't own first. Experience the context of the social environment, the traffic, and so on and so forth. And then once you find your ideal home, then you begin to explore for your first purchase. Now, for young people, from short term, I would suggest rent and lease and don't own. That's good advice. But therefore, let me take this young people to another stage of their life, which is second season, where they're married, they have kids, and so on and so forth. Do you still rent and lease and don't buy? I would say the answer is no. Because each time you shift, it's going to cost you 30,000 for shifting fee. The packaging fee, the rental fee, the renovation fee, and all those electrical setup fee, the Wi-Fi fee, all the fees will cost you a bomb. Each shift will cost you roughly about as simple as 3,000, as much as 20,000 because of the deposit you have to pay and so forth. Imagine the 20,000 you can put into certain investment and give you a 10%. So your 22,000 ringgit over there, or US dollar, or whatsoever it may be, it can be an asset, a piece of asset that you can actually give your children the education, a piano, or so on and so forth. So for mid-age, I would say for a married couple at the mid-season or mid-term, it's better to own an asset. Why? Because all the miscellaneous expenses that you need to use for other people's asset could be your asset. For example, if you are spending 20,000 shifting a house and 1 year you shift 3 times, that's 60,000. Now this 60,000 can be a master degree for your son, for your daughter, or even for yourself. And then you can shift this 60,000 into monetizing your gifting as an MBA, earning more salary, so on and so forth. Correct or not? So therefore, for midterm and married couples, I would recommend them to own an asset. Now the third phase, which is in the elderly stage and also a long-term, elderly long-term, right? In that perspective, I would say, if you don't have an asset and you're growing old alone, and your parents is already on your shoulder and your kids are not taking care of you, my question to you, where are you going to liquidate your assets? In all the world, there is one thing called reverse mortgage. Reverse mortgage means whatever asset you have and you do not have enough to pass on in older age, you can reverse it, mortgage it, collect the cash and sustain a living. Okay, sustain your living means if you need 500,000 for another 20 years and you don't have the source of income, you can't work, nobody's going to employ you. So therefore, you can reverse mortgage your asset, pledge it and get a X chunk of money, 500,000, 600,000, and use that money slowly over the years until you change your address to heaven, so on and so forth. Even with your children will be a blessing. If your children is not there to take care of you, it will be an asset. They can use it for your older age. So therefore, the context of advice is very important according to the person background and the seasons of their life. So therefore, a comment on rent and lease do not own, this statement is correct as well as not correct. Why? Because the context of advice and the season of the persons is very important in order to give a good advice and also a viable decision making. If this video brought you any good value or value in any sense, do press the button, like and subscribe, and see you in the next video.